What is up, everybody? Welcome back to another episode of Bitcoin and Markets. I hope you like that new intro. That's just something I'm trying out. But welcome. I am going out on Telegram, YouTube, and Rumble. So thanks for joining me, guys. Like, comment, subscribe. I will check the comments later on in the stream and answer those as well as I can. Today is Fundamentals Report Day. Monday, every week, I put out my free weekly newsletter, the Bitcoin Fundamentals Report. So we're going to read through that. I'll go on my tangents. I'll elaborate on certain subjects. So that's what we're doing here today. Let's share the screen and get right into it. And I'm going to share my screen with Telegram as well. Share screen. I don't have any audio this time. So, all right, let's make this bigger for you guys. Okay, so bitcoinandmarkets.com is what you're watching here right now. Last, I almost forgot to mention this. The February price forecast competition. This is your last day to get your entries in. So paid members on the website can enter that. Just guess or predict, use your skills at forecasting the Bitcoin price to get a price at the end of the month. So the closing price for the monthly candle at the end of the month, closest person wins $20 in sats over the Lightning Network. Check it out. It's a fun way to have a little competition, support my content, and, just test your knowledge. So that is that. Let's go back out here. Free members will get the fundamental report every single week. So let's dive in. Always start off with a meme. 100K Bitcoin objects in a mirror are closer than they appear. I thought this was funny. Adam Back sent this out. I don't know if this was originally his, but he has been known to have some spicy memes in the past. So it's possible that he came up with this on his own. But yeah, I really do think that there is a chance that Bitcoin can rally hard and surprise a lot of people how fast it gets to 100K. But I thought that was a cool meme. All right. Stand by, my damn dog's barking. All right. Snapshot of Bitcoin is the next section. Weekly trend is range bound. We're going to go over a price chart here in a minute, and you'll just see how range bound it has been for about like 8 weeks, maybe going on 9 weeks. It's been very range bound, right around 42,000, 43,000. We'll take a look at the price chart here in a minute. Media sentiment, I'm moving it down to neutral because there is a little bit of FUD coming out. The New York Times had a piece. Then there was the big U.S. government is looking into the mining sector and how much energy it's using, where it's using the energy and stuff like that. And people are taking that negatively. And of course, building up to the halving, there's always this FUD about miners are going to go bankrupt after the halving. So I switched this from being positive to being neutral, even with all this ETF stuff. And I have seen some reports of, I don't know if it was on Bloomberg or if it was on the website for BlackRock or something, but most of the top articles that they're showing is Bitcoin related. So Bitcoin ETFs, maybe some explanatory type posts out there on all of these large wealth managers websites. So that's just that's positive, but overall the media sentiment is negative. Network traffic, moderate. We'll take a look at the mempool. Mining industry is surging, new all-time high in both difficulty and hash rate. So we'll take a look at that down below. Days until halving, 72. We're getting close, guys. We're getting close. For the price, only $200 lower. But if I would have taken this, at the time of when I filled this out, if I would have done it an hour earlier, it probably would have been even closer to just flat even. Overall, week over week, that is the story here. Is price is just dead flat. Market cap is 838 billion. Satoshis per dollar 23.40. One Finny is $4.27. Previous difficulty adjustment 7.3%, just a monster adjustment. Especially, just think like how mature Bitcoin is getting, and it's still having a 7% difficulty adjustment. It's just mind-boggling how how much the mining industry is growing right now. The next estimated adjustment plus 7% in approximately 10 days. Mempool is down from, I think the highest I saw it was 581 megabytes. It's down now to 387 megabytes. But that is pretty big still. However, fees for the next block are at $1.50, or about 25 cents per virtual byte. Low priority fee, you're not saving anything. It is also $1.50, at least when I pulled these numbers. Fees vary widely throughout the day, so you might catch it at $3, $5, but when I pulled it, it was $1.50. Lightning channels, I did have a new source for this. The mempool.space and their Lightning statistics, they did update, but they didn't give me confidence. Because usually they would update and they would show like how much it has changed over the last day or last week or whatever. And it didn't have any of those percentages. It just had new totals. So I went to 1ml.com, I believe it is. And that is a Lightning website that's been tracking the stats since Lightning started. And so that's what I used here today. Capacity. So this is for 2-week change, because we didn't update these numbers last week, but capacity for Lightning Network, 4929 in Bitcoin. That's about, I want to say it was $210 million. That's down 1.5%. The Lightning Network is not catching on. Channels also down about 1%, down to 58,000. Okay, in case you missed it, I did not get a Proton out last week. I was struggling to get my Bitcoin Magazine Pro content out. There was some kind of changes going on there. I hope I can announce those soon, but it looks like Bitcoin Magazine Pro is starting to turn a corner. They're putting more attention onto it, and perhaps my role will grow over there. So I did not have a chance to put out a Proton last week. I will get one out this week, though, however. Okay, community streams, those are going on 3 days a week. Blog, nothing new for the blog either. All my writing has been for Bitcoin Magazine Pro over the last week, but I did get this one out. Exchange balances finally affected by Bitcoin ETF inflows. You guys can check that out. All right, now let's get into the headlines. Nayib Bukele wins re-election in the largest margin in a democratically contested election ever. So any democratic election that actually had different people to vote for. This was the largest in history. I think it was something like 87% was the margin. He got 90%, and the next closest person got 3%, something like that. But yeah, just a huge, huge win for Bukele. This is not new, a typo. This is not new for Bitcoin, obviously, because he has adopted Bitcoin as legal tender there. Oh man, there is typos here. Sorry, guys, I did not proofread this section. To be used alongside the US dollar. So this is not new. Bitcoin knows about El Salvador, and but it's good for Bitcoin because Bitcoin is like a testing ground for this type of action, and he wins re-election in a landslide. So this is very good it makes Bitcoin look good, in my opinion. He has very big plans for the country and their Bitcoin industry. Okay, next story is the Biden administration declares emergency over Bitcoin mining to speed reporting by miners. So I think that they had this request out to miners, but the miners were slow rolling. They didn't want to comply and all this stuff. So he signed a emergency order for them to report. And I think they have until like April 15th or something like that to report all this data. The EIA really wants to get in there and understand what's going on in Bitcoin mining in the United States. But okay, so I said this is an interesting story. It is not a crackdown on Bitcoin, but an information gathering exercise, similar to how the EIA, the Energy Information Agency, collects data on oil rigs, production, and exports. They will likely try to impose similar reporting on Bitcoin. And I don't like this, okay, but I understand that it is a source of information, and it can be relatively neutral. Like if you think, how much does the EIA's reporting of oil production and rig count and all that stuff for the oil industry, how much does that affect them? Not really at all. I mean, it'd be better if a private agency did that, and I'm sure lots of private agencies do that, and that's proprietary information. But the EIA makes it public, okay? And so that's, I think, how I would interpret this, or how I would recommend interpreting this. So this is just a rig count, and it really is rigs too, because they're Bitcoin mining rigs, right? So this is a rig count for Bitcoin, just like the oil industry. The only thing that can be learned by the government with this is they find out how beneficial Bitcoin mining is. Aren't you guys confident that Bitcoin mining is beneficial? Okay, well, they're going to learn that. We're just going to orange pill more and more people through things like this. This is not a crackdown. This is information gathering. All right. Next story up, Javier Milei eliminate most taxes on Bitcoin. I've seen this reported incorrectly, at least from the information I found on this. It's being reported that the bill that he has already eliminated the taxes on Bitcoin. As far as I know, this is just a bill, and it's not going to eliminate all taxes on Bitcoin. Should the proposed legislation pass? Okay, where did I get this? This is from ccn.com, Crypto News Network, I believe. Should this proposed legislation pass, holding cryptocurrencies in Argentina will not incur taxes, as detailed by accountant Marcos Zarcaro. Tax obligations will arise only from capital gains generated through sales. So there are some countries that do unrealized capital gains. I think some countries in the EU has unrealized capital gains, but this would make those go away, prevent those from being applied, and just having capital gains on your tax, on your sales. This might change though. I mean, because capital gains actually puts Bitcoin at a disadvantage for using. Yes, it can be a store of value and it can fulfill that role extremely well. But when people want to start using it as a medium of exchange, and you have to track everything, your cost basis on those coins, and first in, first out accounting or whatever, and then you have to report your capital gains, that makes it hard to adopt it as a medium of exchange. Moreover, international transfers for cryptocurrency will be subject to a tax rate ranging from 5 to 15%, a strategy designed to attract foreign cryptocurrency investments, as per industry specialists. Okay, maybe it's there. I don't know why they would do that either. Just to maybe keep Bitcoin from leaving the country, investments coming in, but keep the Bitcoin from leaving the country. But Milei, that doesn't strike me as something he would actually be in support of. Of course, these are baby steps, and he's done great things already in his first however many days, like 90 days he's been in office. He's done great things. So let's just see where this goes. Some more of my thoughts is, this is a good move by Milei, and hopefully a first step. The way I'm reading reports of this bill is that most Bitcoin transactions will be untaxed. No sales tax, for instance. However, like if you buy Bitcoin. So if I buy $20 in Bitcoin, there won't be a sales tax on that. Okay. However, if you have a capital gain on Bitcoin, when you sell it over a certain amount, you will pay a 15% tax on that capital gain. And I think I saw that it was roughly $100,000 in value. If you sell more, if your capital gain is more than $100,000, then you would pay 15% in capital gains. The biggest part of this move is showing the world that you must have a policy on Bitcoin. It cannot be ignored. You also are best served to be inviting to Bitcoin and Bitcoin businesses. All right. So those are the Bitcoin news items for this week. And I think that What struck me is just how that last line, or this last paragraph, is that it's showing that it can't be ignored and that you have to have a Bitcoin policy. You have to. The US is starting to figure this out. Of course, El Salvador is leading the way. Bukele is leading the way. Javier is leading the way here. But the US is starting to get involved now. They're starting to investigate. And what's going to happen when you investigate? You're going to get orange pilled. The countries that are going to fall behind are going to be those that are pushing CBDCs, like the European Union and the ECB and China. Those are the countries that are going to be falling behind. Their policy, they have a policy too, and it's we hate Bitcoin. Okay, the US has certain factions in it that hate Bitcoin, but certain factions that love Bitcoin. And as you investigate it more, as you learn more, you're just going to get orange pilled more. Okay, so that was the Bitcoin headlines. Let's go into macro. So for those new to the show, Bitcoin and markets, we talk a lot about macroeconomics, geopolitics, things like demographics and all of that. So you're not getting just Bitcoin here, but you're getting how Bitcoin fits into the broader world. If everyone has to have a policy now for Bitcoin, and it can't be ignored, Bitcoin is part of macro. So, all right. First up for the macro section, 27% of Chinese stocks were limit down on Monday. Shanghai Composite, negative 3% overall. Shenzhen, negative 4%. Over 1,400 or 27% of stocks are at down limits. Beijing Stock Exchange, negative 7.5%. The Star 50 Index, negative 5%. And the CSI 1000 futures, negative 8%. This is ongoing crisis here. A couple weeks ago, I wrote about this. They said they were coming out with a $200 billion rescue package. And this time it was going to be directed directly into the stock market. And that did have a period of calm, but now it has picked back up and we're crashing again. I read another headline today about they're toying with a $1 trillion equivalent rescue package for their entire economy. So the more that this happens, the more it's going to chase people into real safe havens like Bitcoin, and the more it's going to cause them to have to print their way out of it, stimulate their way out of it. So that's what's going on over there in China. Nothing seems able to stop the crash happening in China. The US markets are shrugging it off, where in the past they would have been more tightly coupled. This is a sign of deglobalization in the global economy. I mean, Europe is struggling, but the US economy right now seems to be holding up. Yes, there could be lags, and this won't hit the US until, middle of the year or something, but overall, the U.S. has been able to shrug off this crisis in China. There is, and I'll add to that, because who solves the crisis for China? They are a manufacturing, export-oriented economy. They need someone to buy their stuff. They can't just keep building and building and building and not have anywhere to sell it, right? So they need a strong U.S. They need a strong Europe. They need strong export markets. The customer is always right. And who's the customer of China? The US and Europe. So, all right. There is an aspect of this that should be considered, in my opinion. Now, this is getting a little woo-woo into the conspiracy stuff, but average Chinese do not own stocks. In the US, I think it's getting close to 50%, or it might be a little bit over 50% of adults have stocks or are in the stock market. In China, it's way less than that. I would say maybe 10 or 20% at the most. So the average stock market investor are rich members of the CCP. If that is the case, why hasn't there been a massive bailout by Beijing yet? Perhaps Xi sees this as an opportunity to strike at his political rivals. So maybe they're letting it collapse. Maybe Xi is letting it collapse and they're not going hog wild on the bailouts yet, because he kind of wants his political rivals to get taken down a peg, right? But there is going to be a breaking point. They will at some point come in with that $1 trillion rescue package and save the Chinese stock market. But we'll see. We'll see how far it goes. All right, next story is Federal Reserve gets dovish at the FOMC. I covered this live last week. We listened to the press conference and all that. What I did here is I just Googled for like comparing two texts and finding the difference. And so this is what we found between the December meeting and the the end of January meeting. Because what day was that on? The 31st. Yeah, the 31st was the monetary policy decision. But okay, let me bring it up. So the second paragraph was completely taken out. There was a big shift dovish in the language. So I went through and I tried to find some words that were different. And the words that they took out that we've been talking about here on Bitcoin and Markets for a long time: cumulative, firming, tightening, and lags. All those words were taken out. They do not appear in the January statement. However, there were some words added, and they were all dovish words. Balance, like we brought balance back to the economy, or we must maintain balance. That was used twice. Evolving, reduce, in context of reducing the interest rate or their policy rate. Instead of tightening, we have reduce. That's definitely 180 on that. And finally, confidence. There was the use of uncertain. Let me see. Let me bring this up again. Where was that? So in the red right here, this is the use of uncertain last time. So the extent of these effects remains uncertain. And they added it somewhere else. Where did they add it? Uncertain right here. So the committee judges that the risks to achieving its employment and inflation goals are moving into better balance. The economic outlook is uncertain. But I think the way they used it was more bullish than the last time. Anyways, I say last night, Jerome Powell went on to 60 Minutes, and I have not watched that interview, but I've seen one clip of it on Twitter. And he was talking about monetary policy, the economy, and government debt. This was his second appearance on 60 Minutes, which is becoming a big part of their monetary policy. So yes, I remember Bernanke went on 60 Minutes. I don't know if Yellen did when she was the chairman of the Federal Reserve, but I know Bernanke did during the Great Financial Crisis. But this is becoming a big part because Powell went on it back, right after COVID, saying that he's going to print a lot of money, which they don't do. If you're a viewer and a listener to this show, you know that the Federal Reserve does not print money. But he straight up lied and said that they print money digitally. And now this time he's going back on, and I think he's trying to use this as a platform to reach normies. So he is trying to expose the normies who watch evening programming to their influence operation, to the Fed's influence operation. Remember, the Fed does not mechanically do anything. Their only tool is psychological operations. I think they see the recession coming that I've been talking about for about a year now. They see the recession coming. We're in a pre-recession time, and they want to try to influence people that everything is okay, make them believe that everything is okay. They think that if people believe the economy is okay, they will act as if the economy is okay, and a recession will be avoided. Total bullocks. Okay, so that's it for the macro section. Let's get into price. So it's been a boring week. We have been trapped in a 3.5% range this last week. On the chart below, the red moving average is the exponential, where I usually use the simple moving average because it has been respected by the price more. EMAs give more weighting to more recent price action. So that's the exponential gives weight to more recent price action. So it will recognize a trend sooner or shift in trend sooner because it is weighing those most recent price movements more than the previous ones. But a simple moving average, everything is exactly the same. And I would say, most technical analysis uses simple moving averages. Most indicators that are built off of these things use simple moving averages. Of course, a lot of people do use the 50 EMA. So, anyways, let's see. The reason the 50 EMA might give us a better signal here is because everyone is watching for short-term price movements in regards to the new ETF flows. So people have been, there's a lot of news kind of happening over the last month, and so people are looking more short-term. And the EMAs react to new trends faster. That's just kind of my rationalization here. It could also be a sign that a new group of powerful traders who use the 50 EMA are in the game now. I'll be watching this closely. The bottom line remains, whether using the simple moving average or the exponential moving average, price has not been rejected downward or failed to hold these levels. So let's bring this open. So the red line is the 50 EMA. We are holding above it. And right now, let me go check the live chart. We'll share this tab real quick. Live chart, throw on the EMA or throw on the MAs. Let's see which one I have up. I'll take that one off. So we're still above the 50 EMA, but we're going down 42,348 right now. There is support at this level. There's support down at the 100. There's support at 40,000 round number. There is also support at about 38,000, which comes from over here. There is also a ton of volume support, which I will show you here in a second on the report. But let's get back to that. Where was I? Okay. Zooming out a little on a daily chart, we can see this very strong range-bound price action in a lead up to the aftermath of the ETF launch. Okay, so here we go. December all the way through today, we have pretty much stayed in this very narrow band with a little bit from the ETF up and then down, and now we're back in this range. But that's a very tight range historically for Bitcoin. It usually doesn't do that. It's really an interesting phenomenon. Once we break out of it, this will provide very strong support on any future dip. So once we do go above this range will now be support in the future. So that's bullish as long as we break above it. If we break down from here, oh boy, that's not good. But we're coming up close to the halving. We have constant buy pressure from the ETFs at MicroStrategy, Tether, all of these people. So the preponderance of evidence is towards going higher, and I think that is the most likely outcome here. So, all right, zooming out again, we have the weekly chart with volume by price. You can clearly see that once we break upward, there is little to stop a rally all the way up to at least 57,000 and then the all-time high. So if we break this level, we go up to this next volume by price level here, and then all-time high. These vertical things here are possible banking crisis coming up. I've been waiting for this Q1 banking crisis, a repeat of last year. Bitcoin jumped 40-50% on that banking crisis last year. I think that a replay could be in order here as well. And then the halving, of course, is in April. I think it's around April 17th, but I'm not sure where it is, because it's a moving target. It's based off block. It's not based off date or anything like that. So, okay, that is the weekly chart. It just looks really bullish to me. Sources of demand continue to be strong and will only get stronger as price rises. Demand goes down or up with the price of Bitcoin. As Bitcoin rises, we should expect inflows into the ETFs to increase. When we break 49,000, it could be significantly more inflows. Overall, since FTX, the appreciation has come in brief, steep, step-like fashion, and we should expect that to continue. So I talked about this quite a few times, but these large positive candles, they they are brief, and then we have a sideways period. So we should probably expect a brief move over a week, maybe 2 weeks stretched out. Maybe we'll have a couple of those the halving, but we'll definitely have at least one before the halving. Okay, that's it for price. Let's go into the mining headlines. So Marathon to pay Hut 8 $13.5 million to take operational control of 2 Bitcoin mining sites. Marathon Digital has agreed to pay Hut 8 a termination fee of $13.5 million to take full operational control of its recently acquired Bitcoin mining facilities in Granbury, Texas, and Kearney, Nebraska. Marathon intends to replace the mining firm as the operator of the sites by April 30th, with Hut 8 continuing to provide management services and conduct self-mining activities in the meantime. Marathon closed the deal to secure ownership of the sites from Generate Capital for $178 million on January 16th. However, Hut 8 continued to manage operations at the sites under its agreement with the former owner. So, 178 million. I mean, these numbers are ridiculous, getting ridiculous. Yes, Marathon is the largest public miner. But I remember back when I first got into Bitcoin and people were raising venture capital, and then didn't Balaji start that, what was it? It was a little node, 21.co, right? 21.co. And they raised $100 million. And Balaji is a VC, like a VC type. So that was gigantic. And now this is just like everyday business. 178 million for a deal for 2 mining facilities. I mean, the rate of growth of this has matured over the last decade is incredible. All right. Next mining story. A Texas town's misery underscores the impact of Bitcoin mines across the US. And this is kind of an extension onto this Marathon post, but Time Magazine hit piece on Bitcoin mining. I know Kearney, Nebraska very well. So they talk about Kearney and Granbury, the same story from Marathon up above there. My 2 sisters and my wife went to college there. The majority of residents are probably thrilled to have industry come to their town. So it's one of those towns like you kind of know about, small towns that have lost a lot of people. Their kids grow up, they graduate from high school. Where do they go? They go to Omaha, or they go to Kansas City or St. Louis or the Twin Cities. They go to some other bigger city, Denver, not too far. So these smaller, Kearney is a smaller town. And it's probably had a rough time the last 40 years. But this is good. So they like having industry come to their town. I'm sure of it. Probably 90% of them think it's a good thing that they're bringing jobs, they're bringing income. They probably think it's good. It's only a few residents complaining about this. It's the same busybodies that you find everywhere. Okay, so this is a quote from the article, and it was from time.com, Time Magazine. In December, Marathon paid $178 million to purchase Bitcoin mines in Kearney, Nebraska, and Granbury from Generate Capital. But with the Granbury purchase, Marathon also inherited a swath of angry nearby residents across Hood County whose lives have been upended by the mining facility. Shirley says that he is monitoring the decibel levels of the facility. Ooh, you're monitoring the decibel levels. Texas state law stipulates that a noise is considered unreasonable if it exceeds 85 decibels. For comparison, vacuum cleaners often run about 75 decibels. And a cardiologist told Time in 2018 that chronic exposure to anything over 60 decibels had the potential to do harm to the cardiovascular system or your eardrums. Shadden took her own readings at her house near the Bitcoin mining facility that reached 103 decibels. I doubt it. I mean, unless they are like 25 yards from the mining facility. I guess that would be possible. But the people that work there, they have their hearing protection. So if this is a problem, they can build some wall to reflect the sound or something like that. But I doubt that it was 100 decibels a mile away. You probably could hear a low hum or something like that, but a mile away, you're not going to be hearing all of these machines. Okay, so that's it for that story. Let's go to the big one here out of the EIA, the Energy Information Agency. They reported exploring how to measure Bitcoin energy consumption. So they don't even know how to measure this. In this report, they said 0.6 to 2.3% of US electricity consumption is in Bitcoin or is mining Bitcoin. That's a pretty wide swath there. Bitcoin will eventually use half of all energy. And I don't really have time to go into that completely, but money is half of all transactions, and most likely Bitcoin is going to use nearly half of all the energy in the world at any one time. That is a huge positive too, because just think, if they want to, they can bid that energy away from Bitcoin. If they have a better use of that energy, a more profitable use of that energy, they would do it, but they don't. So it's a huge positive if energy is being used for Bitcoin. That means it's the most productive thing they can do with that energy. If it wasn't, people wouldn't do it. No one is twisting their arm to mine Bitcoin. The main thrust of the report is discussing how to estimate Bitcoin's energy use. They go over a top-down approach, like Cambridge. Cambridge has had that hash rate and energy usage measurements for a long time now. They do a top-down where they take estimates, consider total hash rate and an average efficiency of the mining equipment. So that's a top-down approach. It's just all estimates. And they got kind of in trouble by Daniel Batten, or he got after them because they were using old estimates of the mining equipment, and the mining equipment continues to get better. And so once they fixed that, a lot of their data changed over there at the Cambridge measurements. So that's the top-down approach, or a bottom-up approach that includes counting every facility and every machine. So that's what they're trying to do. Here's the map that was included in their report. Okay, so Bitcoin mining facilities is not cryptocurrency mining facilities, dummies. Okay. Not one of those dots is mining anything but Bitcoin. It's Bitcoin mining facilities. Bitcoin is money. It's not currency. Cryptocurrency is just as bad as crypto. It's starting to trigger me on this. I've noticed a lot less usage actually of the word crypto. It's kind of like blockchain. When everybody out there in like 2014, 15, 16, blockchain, blockchain, blockchain. Bitcoin is a blockchain. Ethereum is a blockchain. That was the buzzword that they like to use. And of course, we still have some idiots. They keep saying that it's the technology behind Bitcoin that's intriguing, right? But blockchain died out because they realized that it's blockchain by itself. Bitcoin is made up of different parts, but they're a whole. You can't just take out one thing out of Bitcoin and then build it a different way, and it will work the same. It doesn't work like that. Bitcoin is holistic. If you take any one piece out of Bitcoin, it changes everything. So blockchain died out. They've realized that it was worthless. I remember they thought that blockchain was more efficient because they had to come up with something that explained Bitcoin's success early on. It must be because some new technology created new incentives or created a way for Bitcoin to get ahead and actually catch on. It couldn't be because of sound money. It couldn't be because of limited supply. It couldn't be because of fiat currency or the credit based system is breaking down. No, no, no. It's not that. It's the technology is so great. So that then they took the technology and they tried to do other things with it. And of course it failed because the blockchain is inefficient. They were trying to say that blockchains brought efficiency, but they were inefficient. But anyway, the whole reason why I say that story is because the word blockchain has kind of died. You don't really hear that very much anymore. Crypto was the new thing, and I think, maybe peaked. I think it's peaked. Maybe it peaked with FTX, the use of the term crypto. It might have peaked with FTX, and now they're going into things like cryptocurrency, because cryptocurrency doesn't have the same stigma attached to it that the word crypto has. So anyway, we got to push back on this use of cryptocurrency. Bitcoin is not cryptocurrency. That was a bad term. And I said that, so I Satoshi didn't use it, I don't think. I said that in another podcast, and somebody I think might have reached out and said that he used it one time towards the end, but he didn't use it like in the first year of Bitcoin. When did he leave? Did he leave in 2011? So he might have used it like at the end, but he didn't use it in the beginning. And he probably wasn't the first to use the term cryptocurrency. But anyway, Bitcoin is money. It's not a currency. Currencies are denominations of money, like $1 worth of gold. Okay, now it's $1 worth of $1, but currency is a denomination of the money. Bitcoin is the money. That's all you can say. Okay, that's interesting chart there. All right, let's continue with the mining section. Going into difficulty, last Friday saw a huge difficulty jump, plus 7.3% to a new all-time high. Miners are already on a tear toward the next adjustment, which is estimated right now to be about the same size as 7%. It's a wide window because it's still 10 days away, but I saw between 4 and 11%. I just estimated 7%. For rookies, so if you're new to Bitcoin watching this show, difficulty is automatically adjusted every 2016 blocks, depending on how fast miners are finding blocks. So it could go up or down. If the blocks are coming in too slow, then it gets readjusted, difficulty down. If they're coming in too fast, then difficulty gets adjusted up. The formula targets a 10-minute average time. During that time, miners are spending money producing work that can't be faked. An attacker, quote unquote, would need to burn the energy and have the equipment to overpower the network. As difficulty goes higher, the more money must be spent to double spend or produce empty blocks. So double spend, for those people new, most of you probably are not new, but double spending is when you spend the same coins twice. So I send one transaction to this person, and then I send the same coins to another person. The way that most systems in reality get around that are, well, physical is obvious because I'm giving something physical to you, and now I don't have something physical to give to this person. Digitally, though, it's much harder. How do I keep my account up to date that I sent this over there and now they have that money and I can't send that same money to somebody else? Well, that had to be done by a central party until Bitcoin. Bitcoin solved the double spend problem without a central party. Or they could produce empty blocks. So they can do the one double spend or maybe two or whatever, a couple double spends, whatever, or they can produce empty blocks. That's all they can do if they overpower the network attackers. These are the only two attacks possible in this regard. Miners don't control the rules of the network, so they can't just go in and change it from 21 million to 25 million and give themselves all that extra coin. They can't do that. The nodes make the rules. Miners create valid blocks. They have to make valid blocks. They can take back their own transactions or refuse to confirm others. That's all they can do. All right, so here's the difficulty chart. See the big 7% jump. Hash rate. Hash rate has completely recovered from the cold wave in the US that triggered a demand response called curtailment. So in Texas, that's the one that's most well known, but I know that there's other programs elsewhere. They ERCOT, ERCOT, the Texas like grid company, energy company, they tell the Bitcoin miners, hey, we want you to curtail your use of energy during these uh, outbreaks of real cold temperatures or real hot temperatures, and that way the rest of the grid that's going to be really needing that energy right then is going to have enough energy. So that happened. I think it was something like 40% of mining in Texas went offline. So yeah, after that, totally recovered. That's it. Let's take a look at that chart. New all-time highs, just surging. The whole mining industry is surging. Okay, mempool. The mempool transactions waiting to be confirmed has dropped dramatically this week. The excitement of the ETF launch has waned, and there was no large weekend spike for inscriptions. And we'll take a look at inscriptions down below here. But you can see this has fallen way down. We'll see if that continues throughout the week. Usually in Bitcoin, not in inscriptions, but like just regular Bitcoin transactions, I think Monday and Friday are the busiest days, but there's, the weekdays are actually more transactions than on the weekend. It's something like half or maybe 75% of the transactions that occur during the week then occur on the weekend. With inscriptions, it's the other way around. They were taking advantage of that discrepancy in weekend volume, and they were putting all of their transactions, more likely on the weekend. So anyway. Okay, so let's take a look at inscriptions. So the moving average on this chart, I say, resumed its downward trajectory. It does seem as if the market for and excitement around inscriptions is waning. So you can see these spikes, they typically were occurring on the weekends. But last weekend, only Saturday had a little bit of a spike up to 300,000, not nearly up to, the 400,000 that we have been seeing, and repeated days of 400,000, right? So inscriptions are not coming in when fees are low. So that's interesting. I say any long-term sustainability of inscriptions must support itself financially. With about $5 million per week in fees, the niche market, or sorry to whoever pointed this out, the niche market, no, I say niche. The niche market must provide value at a significant margin above that, so above 500 or 5 million. For instance, 5 million a week in fees to support a 10 million market, $10 million market doesn't make much sense. Even if it were a $100 million market, that is a high amount of fees. Remember, NFTs were on altcoins in the first place with very low fees for a reason. Their Ponzi like nature can't support the bleed out of fees. Let's take a look at this chart. See about 5 million last week. It's been about 5 million average this whole year. Very interesting. Okay, let's go on to layer 2 news. Guys on Telegram, you would have seen this already, but it has been reported this week that 40% of Bitcoin developers are working on layer 2 or ordinals. This number is not surprising to me at all. In the future, this number should be much higher. So it should be not 40, but it should be like 80 or 90%. Most big companies will have dedicated, I think, dedicated base layer Bitcoin developers that are helping to maintain the code. But that will be a small group. Most of them will be working on layer 2s, whether it's internal layer 2 for some company or whether it's a public transparent layer 2 like Lightning or a federated chain, some sort. or layer 3, whatever. But I expect that to be much higher, 80, 90% in the future. Okay. Um, what is surprising, however, is that there is not more progress or adoption of layer 2. I thought for sure by now we would have seen a big uptake in Lightning, a big uptake in Liquid. We have not seen either. There just is very little demand out there right now for Bitcoin layer 2. Fees are at $1.50. That's one part. If fees were $50, you would see a lot more action on layer 2. Maybe not Lightning, because there are some trade-offs there. But looking back on my time in Bitcoin, that is a big surprise to me that layer 2 has not taken off more than it has. And that will do it for today, guys. So thanks for joining me, Ansel Lindner, Bitcoin and Markets. Let me take a look at the chat. Dex Invictus. I don't understand capital gains through sales. Does it mean you have to sell Bitcoin directly for dollars? And if you buy a good, there is no cap gains. So no, if I buy Bitcoin at 10,000 and it goes up to 100,000 and I sell it, that 90,000, the difference is a capital gain. And I don't know how it works in Argentina. It looks like they're trying to make it flat 15%. In the US, it is 30% if you do that under 1 year. So if you buy and sell with under 1 year, then you pay 30% of the difference. If it's over 1 year, that's considered long-term capital gains, and it's only 15%. So every country is going to be a little bit different on that. Like I said, I think some countries have capital gains on unrealized gains. So even if I don't sell the Bitcoin, then just because it went up, I have to count that as if I realized the gain and I sold it. Also, like in the US, the way it is right now is that if I buy Bitcoin, let's say I buy $100 worth of Bitcoin and it goes up to 200, and then I don't sell it for dollars, I sell it for something else, like a laptop or a table or a chair, a new chair that I need for my desk, then that has to be, you have to take accounting of what that Bitcoin was worth when you sold it as if it were money. And so, as if it were being sold for dollars and then buying the table. So you have to track that. That's a problem in the United States because that, like I was saying, it's a great store of value, but when you go to use it for medium of exchange, the accounting is all wonky. So that will change in the future. I have no doubt that that will change in the future. But right now, it's kind of holding people back. It's actually might speed adoption though, because if you can't use it, you're going to have stronger hands to hold it, and holding Bitcoin is the thing that gives it value. So um, the laws the way they are is probably actually speeding the ultimate adoption of Bitcoin. That's what I would say. Okay, so that's all those. Let's go into Telegram and see if you guys have placed any comments. Facey McFace says, time to buy Chinese stock. At some point, they will intervene. Yeah, I think they will intervene. But if you look at the history of the stock market, the Chinese stock market, it has not really gone up in decades. There are other stock markets like that as well. The US stock market is very unique that it continues to go up at 9% a year on average for the last 100 years. That no other country, or at least major stock market that I'm aware of, has anything like that. I mean, just look at Japan. They topped out in 1990 and they didn't even hit those highs until just recently. Let me pull that up. I'll have to share my screen again. Hold on a second. Make sure that goes through. All right. So, where are we at? I need to go to, oh, no, that's not right. Nikkei. We'll do monthly. And I'll take off these moving averages. All right, so I have some lines on here. Let's see if we can do this. So it topped out December, January of 90, December of 89, January 90, and it did not break that level. Let me make this right. It still has not broken that level. Oh my gosh, I thought it already had. It still has not broken that level. Yes, there are times that you can buy in that are better or worse throughout that time. Like you said, is this right now a good time to buy Chinese stocks? Um, I don't, I wouldn't personally, I don't think Chinese stock market is that great of a place to deploy capital. There's a lot better places in the US market to do it. You could buy Bitcoin, of course, all that stuff. But so going back to Bitcoin, see where we're at. That's just a beautiful chart, isn't it? Let's go down to the hourly, see what's cooking. This was looking good. We were up here at 43,400 above this whole formation, breaking above there. And then we got monkey hammered down. It did not break these lows, though, which is a good sign. So we'll see how this develops. But there is so much demand out there in Bitcoin that I just can't see this breaking down very far. Buy any dips, I would recommend. I mean, this is not financial advice, but buy any dips. If this thing dips to like 38,000, that's going to be a steal. If we get below that, oh my gosh, like people will be taking out mortgages, second mortgages on their house to buy more Bitcoin. So uh, I don't see it dipping down that low when we consistently have 1,000 Bitcoins a day or more coming off the market due to these ETFs. So, all right. That is going to do it for me today, guys. Thank you for joining me. Check out bitcoinandmarkets.com. Check out bmpro.substack.com, where I write for Bitcoin Magazine, and have yourself a good day.